The calls for negative rates boost the Bitcoin bulls. Next on your 4-Minute Crypto Show. Today's show is from a post by Nick Shong at Bitcoinist and brought to you by BitBlockBoom, the great Bitcoin conference that's coming to Dallas, Texas in August. Please take a look at bitblockboom.com today. One of the most prominent Bitcoin narratives is that Bitcoin is not correlated with Wall Street. Now, although this was seemingly the case for much of its earliest years, the past few years have seen macroeconomic and geopolitical trends affect the cryptocurrency markets. This was accentuated in March when there was a global liquidity event that saw investors in all markets rush to sell their assets for US dollars. You see, on March 12th, stocks, commodities, bitcoins, and even precious metals all fell in tandem, experiencing their worst trading day in years. That day has since been dubbed Black Friday. But the effects that traditional finance has on Bitcoin could be a good thing, with the asset's bull case recently getting a massive boost as calls for negative interest rates in the United States have mounted. Over the past few weeks, the economic situation around the world has trended worse and worse despite the 35% rally in the S&P 500 and similar gains in other assets like Bitcoin, gold, and silver. Now, to combat these trends, the central banks and the governments of the world have gone into overdrive, embarking on more physical and monetary stimulus than ever before in an attempt to save companies, save people, and ultimately save society. It's a move that has had Bitcoin bulls buzzing. In the past 2 months alone, the U.S. Federal Reserve has added over $2 trillion to its balance sheet, which is a 50% increase from its year-end balance for 2019. But that's not enough. Analyst Narayana Kocherlakota, an economist who served as president of the Federal Reserve of Minneapolis, recently penned a Bloomberg article titled, "The Fed Should Go Negative Next Week," outlining a case for the U.S. central bank to bring interest rates to the negative. Now, unlike cash, which soon may be expensive to hold due to negative interest rates, Bitcoin offers 0% yield and it's a relatively deflationary currency due to the existing of its happenings. Negative interest rates should prove a benefit for a scarce and decentralized form of money like Bitcoin or even gold. Now, did you think you would ever see or even hear of negative interest rates? Would you pay the bank to hold your money instead of being paid to let them hold and use your money? Please let me know your thoughts in the comments. And if you enjoy the 4-Minute Crypto Show, please take a moment and subscribe at 4minutecrypto.com/subscribe for a new episode of this show every weekday. Maybe give me a 5-star review or a great comment while you're doing it. Those things help way more than you know. And don't forget to take a look at bitblockboom.com. If you're a Bitcoiner, this is a must-attend event. I'm Gary Leland, the Bitcoin Boomer, and thanks for joining me on another 4-Minute Crypto Show. This is a Bitcoin Boomer production.